What's up, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts. And if you ever noticed how every few years the market finds a new monster under the bed, 2008, it was housing. 2020, it was COVID. 2022, it was inflation. And 2025 was the AI euphoria. And now, 2026 might be the year AI becomes the thing that eats everything. Last week, we saw software getting nuked, logistics stocks getting punished because a karaoke machine company said it built AI freight software, Pinterest down 21%, App11 down 18%, Nvidia wobbling, real estate twitching, and financial services sweating. It wasn't a correction, it was what we like to call a good old vibe shift. And guess what? This week, we're going to go ahead and find out whether the consumer is still alive with Walmart earnings, inflation is actually cooling through PCE, and whether this AI disruption theme keeps spreading like wildfire. Let's go ahead and break it down in this week's weekly outlook report, sponsored by Investor Central Club, where if you use the code SUPERMAX20, and this is also Investor Central Club, by the way, use that code SUPERMAX20 at investorcentralclub.com to get 20% off your first month. Probably one of the best options flow softwares you're going to run into that's user-friendly, easy to understand, and actionable in real time. So let's get into today's video. The AI sell-off is no longer just about software. This may have started with software, Salesforce, ServiceNow, Workday. Then someone released a new AI plugin and suddenly everything is disrupted. Now it's spreading. Logistics stocks fell because some AI freight optimization headline dropped. Financial services dipped because AI can analyze contracts faster. And retail, well, it's under pressure. Real estate, it's currently under pressure as well. This is no longer is AI bullish. It's how many industries get margin compressed before earnings actually break. And that's key because if you notice, in most of the earnings reports we talk about, what is the one thing that most investors care about now, or boards or people? They care about the margins. They care about their margins, meaning like, are they making money? And if they are, what are their margins for that? Okay. AI disruption isn't theoretical anymore. It's affecting multiples at this point. When markets don't know who survives, they go ahead and sell first before they get burned. Ask questions later. That's exactly what we're seeing in this current AI shift in this landscape. Now, let's talk Walmart because, that's the real recession indicator at the end of the day. Because if there's one company that tells you what's happening in America, it's going to be Walmart. Thursday's earnings aren't just about revenue. They're about low income, consumer health, grocery versus discretionary mix, trade down behavior, shrink margins, traffic versus tickets. Remember, CPI, we just had a killer report on CPI. And we just had a very strong jobs report last week as well. That blew expectations out of the water. But revisions quietly cut 400,000 jobs from 2025 totals. That's not a collapse, but it's not strong. It's not strength either. So if Walmart says traffic is strong, grocery is holding, discretionary is stabilizing, margins are fine, well, that supports the soft landing narrative. But if they say consumers are being stretched out, trade down is accelerating, and margin pressure is rising, that's when the higher for longer narrative gets a little more complicated here. Because if inflation falls due to weaker demand, that's not bullish. That's just what we like to call a earnings risk. Now, Friday is the real macro event you need to pay attention to. PCE. Core PCE is expected at 0.3% month over month and 2.9%, down 2.9% year over year. Now, here's the tension. CPI, it already showed that it cooled, but the categories that surprised, the sticky ones, were non-shelter services and core services, the stuff the Fed actually cares about. Right now, traders price roughly 50% odds of a June cut. That means we are not in panic, we are not in easing, we are in a maybe phase. If PCE comes in hot, well, June cut odds are going to completely collapse. No chance. Front end yields are going to rise. Duration sensitive stocks will get hit in the face. AI plus high multiple names are going to feel pressure again. And if PCE comes in soft, you're going to go ahead and get lower yields, an AI bounce, NASDAQ relief rally, and software stabilization. But here's the twist. If it comes in too soft, that means demand is slowing faster than expected. And that's when we start asking, is inflation cooling because supply is starting to finally normalize, or because the consumer is finally rolling over? That distinction matters, and it matters a lot. Now let's frame this clearly, okay? Here are the three market paths we can see from here. So scenario 1, the soft landing continues. Walmart comes in steady, PCE is in line, and AI disruption narrative cools, yields are going to finally stable. The market rotates, it doesn't collapse. This is bullish grind higher. I mean, like, we're just going to see more of those melt up days. Scenario 2, we see sticky inflation and no cuts. PCE comes in hot, Fed stays firm, yields climb, AI capex is questioned harder, and software pain continues. Multiples compress even further in this scenario. And then in scenario 3, demand finally cracks. Walmart, they give out cautious guidance. PCE soft for bad reasons, and growth fears start to creep in. Defensives are going to win in this situation, and volatility will slowly rise. And here's the wild part. All three scenarios are still plausible. That's why sentiment is very, very fragile right now. Now, hyperscalers are expected to spend over $650 billion expanding AI infrastructure. Alphabet is raising $15 billion in bonds, Oracle is raising $25 billion, and Morgan Stanley expects $400 billion in borrowing. That's not incremental, that's massive. Is this 1999 or is this 1997 infrastructure build? Because both involved huge capex waves. One ended in collapse, the other led to expansion. Right now, the market just doesn't know. And when the market doesn't know, it reduces their exposure overall. Now let's talk about sentiment and why it's extremely negative right now. Jefferies traders are saying, I've never seen sentiment this negative. Software ETF down 23% year to date. AI names are volatile. Crypto is getting whipsawed. And when sentiment gets this bad, two things usually happen. Either fundamentals break or you get a vicious rally. This week is going to decide that fate for us. Now here's the real question to go home and think about. And let's wrap this thing up so you can enjoy the rest of your Sunday. Is AI expanding margins, or are they compressing entire industry? Is inflation cooling clearly or slowing because demand is rolling over? Is the consumer stable or quietly weakening under the surface? This isn't about one data point. It's about narrative control in this environment. If PCE plus Walmart stabilize the story, we bounce. If either cracks it, well, rotation's going to accelerate. And remember, markets don't price perfection forever. They price uncertainty. Right now, uncertainty is rising, and that means opportunity for those who understand the structure. I hope you guys have a great rest of your Sunday. Make sure you like, comment, subscribe. Let me know down in the comments below, what do you think PCE is going to land on? Do we see a rally this week, or are we out for more blood? I'll catch you guys in the next video, and I hope you have a great rest of your day. This has been Max Pitts with Trades and Gains, powered by Investor Central Club.